I've been asked quite a bit around how you can actually increase your credit score. And for those that don't know, a credit score is basically what a lender will use as part of their assessment to know if you're safe enough to lend to. If you're interested in finding ways to increase your number, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now the thing is, when you're going out and you're trying to get a loan product or you're going out and you're trying to get some debt, the lender's going to assess you based on what you've done historically and what does your credit file look like. In turn, you get a credit score. And that's pretty much what it's used for. It's to say to the lender that,
hey, I'm safe enough to be lending to because check out my number, bruh.
So let's look at a couple of ways as to how you can increase your credit score. Before I jump into that, there's a link in the description below where you can book in a strategy call or a discovery call with myself. If you are interested in buying property and you're looking at how do you actually start in property, go visit the website. I run a buyer's agency and we can help clients like yourself to go and build out their property portfolio. We only focus on helping investors go and buy property to go build for their property portfolio. So it doesn't matter what state, we're looking at regional markets as well as metro markets. So definitely go hit me up. Number one is to pay your existing debt on time. Now this is something that to a lot of people is like, oh, well, no shit, Fred. But the thing is, people miss out. They either are late on their payments, they get penalty rates and things like that, but this all affects your credit score. So if you do have existing debt, that's not a bad thing. You can use debt to your advantage, but if you do have those things, it's probably best to set up like an auto repayment system where it directly debits into paying off that debt or making the minimum repayments. This way, it doesn't get flagged in your credit file as someone that is risky to lend out to. By missing out on a payment or even being late, it can have a negative impact on your credit score. So definitely don't want to mess around with that. You want to be paying your bills on time. So when you're looking at electricity bills, you're looking at your phone bills, your broadband bills, you want to pay these on time because as soon as you default or you're overdue by say 60 days, then at that point, it starts getting flagged up in your credit file. And again, that's going to have a negative impact and something that you can avoid by just setting up direct debits. I've got plenty of things that I have to pay for, like the internet, as well as my mobile plan, among other things. I have them as auto payments through direct debit. So it just means that it's paid when it's due and I don't have to worry about those things. Having these little things can start adding up and the most efficient way to have it done is to have an auto repayment system. The next point is carefully assessing when you're applying for credit. Now this is something that often gets overlooked, especially when you've got home loans, you get a broker that comes out and says, hey, you know what, let's go put a pre-approval in or let's do it again. Doesn't matter, we can just keep doing it. The thing is, this comes up on your credit file. And for some lenders, if they see too much activity when it comes to applying for new credit, in their minds, they're thinking, what the hell is this person trying to do? And if they're applying this many times and they're not actually going ahead and purchasing a property or buying something with that debt, that to me suggests, or to the lender at least suggests, that there might be something wrong here. And they start flagging those things. So when you're going out there and you're getting multiple pre-approvals done, be very careful and strategic about why you're doing this and is a reason why you need a good broker on your side. If you are interested in using my broker, definitely just send me an email. I'll have my email in the description below. But essentially, if you go and work with someone that you can actually say leverage their experience, leverage their learnings as well, it's going to make your process so much easier. Check your credit report. So this is not something that's got to do with you making your repayments, not making your repayments. It's just simply having a service there. You can have a paid service or a free service, and you can check your credit report on a regular basis. Now you might be wondering, why the hell would I want to do that? And it's because there's a lot of fraudulent activity and scammers going around. I actually got affected by this myself, where I had someone open up an account on Afterpay or something, and when I actually looked at the email welcoming me and all that, I was like, dude, I'd never use that crap. So what the hell's going on? And once I contacted the team, I realized that someone else had created it on my behalf. I pretty much got hacked. This is something you can keep on top of with like say paid providers. And that's one of the ones that I have where I can just have it come up and it notifies me every time there's an activity that's logged onto my credit file. I want to know when that stuff's happening, and it's definitely worth it in my opinion to be paying for that to get that extra peace of mind. If you have a regular check of your credit file, if you see something that's there, then you're able to go and address that, whether that's an overdue bill that they haven't recorded or something that you can fix. You'd rather fix that during times where you don't need a loan so that when you actually go in for a loan, you're not having to think about those things. To get stuff removed off your credit file can take some time. So imagine trying to go and buy a house or you're trying to get a loan and then all of a sudden you see your credit file for the first time in like 2 years and there's a bunch of stuff on there that's going to be detrimental to you getting a loan. You're going to be stressed out. So you may as well look at these things when you have the time and be able to revisit this on a regular basis. Hold on to your credit cards. Now, okay, I've got to give you the disclaimer. I'm not a financial advisor by any stretch of the imagination. And when it comes to credit cards, the thing is there are so many risks and most people should never have one. They can never manage the actual repayments. They go into debt, spend money that they don't have to impress people they don't like. I love that line. But if you do have a credit card, you want to be able to not only make your payments on time, but you want to be able to demonstrate to a lender in the future that, hey, I've got debt and I've had it for a while, but I'm also able to manage that with my cash flow as well as make the repayments that are required on time. The longer you hold that, the more likely your credit score will go higher because you've always made the repayments on time. In addition to that, yes, there are some costs, but there are some free credit cards that are probably already applicable to what you have at your bank right now. So it's definitely worth checking out, but I wouldn't be going out just getting a credit card purely for this reason. I would get the right savings plans and habits in place first before going and taking up debt like that. And if you do go ahead and take up a credit card, probably worthwhile having a lower limit on there because a higher credit limit is actually detrimental to your borrowing capacity. I hear this all the time. Someone goes, hey, I've got a credit card. It's paid off. I pay it off all the time. It's got no debt on it, but the credit card limit is actually like $10,000. But I pay it off all the time, zero balance. And the thing is, the lender doesn't know that. In fact, they can look at it and say, well, that's fine, but you could use $10,000. So we're going to assume that you use $10,000 as debt on your credit card every single time that we're going to put an application through. That then reduces your borrowing capacity. This is something that gets overlooked as well. If you have a savvy broker, they're probably going to be already across this. And the last tip I have is to actually have an emergency fund. Now, it's got nothing to do with your credit file specifically or your credit score, but what it means is that you're practicing good habits. By having an emergency fund means that if you did, for whatever reason, miss out on a payment or you think you're not going to have enough income in that month, especially if you're a business owner or you're self-employed, that emergency fund will kick in and be able to actually just offset that payment for that month. That one payment and not making defaults on any of your repayments allows your credit score in turn to increase, and it means that lenders are more likely to give you a loan. I hope you guys have enjoyed this quick and snappy video around how to increase your credit score. I think it's worthwhile being across it, even if you're not applying for a loan today. If you are applying in the future, you may at some point want your credit score to be quite high. So it's worthwhile paying attention to these sort of things. If you have enjoyed this video, drop a like and subscribe to the channel, and I'll catch you guys in the next one. Thanks, guys.